The stock market is reeling. President Trump's new tariffs are the primary culprit. These tariffs target major U.S. trading partners. The goal is to reduce the trade deficit. However, the market is reacting with fear and uncertainty. Investors are worried about a trade war. This uncertainty is causing widespread selling. President Trump has stated that there will be no delay in implementing these tariffs. This hardline stance has further spooked investors. They fear retaliatory tariffs from other countries. This could escalate into a full-blown trade war. Such a scenario would harm global trade and economic growth. The market is now pricing in the risk of a trade war. This is leading to a broad sell-off across all sectors. Investors are seeking safe haven assets like gold and government bonds. The CBOE Volatility Index, or VIX, a measure of market fear, has spiked sharply. This indicates extreme levels of anxiety among investors. The situation remains fluid and unpredictable. Investors are urged to stay informed and proceed with caution. The coming days and weeks will be crucial in determining the severity of the impact on the market. Fears of a recession are mounting. Many CEOs believe the U.S. economy is already in a recession. This sentiment is fueled by several factors. The ongoing trade war is one major concern. Additionally, the sharp drop in oil prices is raising red flags. Historically, such drops have been associated with economic downturns. Jamie Dimon, CEO of JP Chase, has issued a warning. He believes the tariffs will accelerate inflation. This will force the Federal Reserve to raise interest rates more aggressively. Higher rates could slow down economic growth. This could ultimately tip the economy into a recession. The yield curve inversion is another worrying sign. This refers to a situation where short-term interest rates are higher than long-term rates. This is considered a reliable predictor of recessions. The yield curve has inverted several times in recent months. This has heightened fears of an impending recession. The economic outlook remains uncertain. However, the accumulation of negative signals is hard to ignore. Investors are bracing themselves for a potential downturn. The stock market is a sea of red. Major indices are experiencing significant losses. The Dow Jones Industrial Average has erased all its gains for the year. The tech-heavy Nasdaq Composite is also deep in negative territory. The S&P 500, a broader measure of the market, is approaching levels not seen since the Great Depression. The Russell 2000, an index of small-cap stocks, has been hit particularly hard. Small companies are considered more vulnerable to economic shocks. This is reflected in the index's sharp decline. The Russell 2000 is now at its lowest point since 2023. Market volatility has surged to alarming levels. The S&P 500 experienced its largest intraday swing since the 2008 financial crisis. This extreme volatility highlights the fear and uncertainty gripping the market. Investors are struggling to make sense of the rapidly changing landscape. The market decline is broad-based. Few stocks have been spared from the sell-off. This suggests a lack of confidence in the overall market direction. Investors are selling first and asking questions later. This panic selling is exacerbating the downward spiral. Section 4. Tech, autos, and restaurants feel the heat. Specific sectors are bearing the brunt of the market downturn. Tech stocks, once market darlings, are facing a harsh reality check. Chip stocks are particularly vulnerable. Analysts predict a further decline if the trade war triggers a recession. Apple has seen its shares tumble. The company relies heavily on China for manufacturing. Additional tariffs would impact Apple's supply chain. Tesla is also facing headwinds. Concerns about demand and trade pressures weigh on Tesla's shares. Automakers are grappling with their own challenges. The trade war is disrupting global supply chains. This adds to the woes of an industry already struggling with slowing demand. Restaurant stocks are also feeling the pinch. Consumers are becoming more cautious with their spending. This translates into lower foot traffic and sales for restaurants. The market downturn is not discriminating. Companies across various sectors are facing challenges. The global economy's interconnected nature means no industry is immune to the trade war fallout. Section 5. Analysts predict continued volatility. Market analysts are closely monitoring the situation. They are offering their insights and predictions for the market's future. UBS, a global financial services firm, expects market volatility to remain elevated in the coming weeks. This uncertainty is likely to persist until there is more clarity on the trade front. HSBC, another leading financial institution, believes a short-term bounce is possible. However, they caution that the market downturn is far from over. They advise investors to remain cautious and avoid making any rash decisions. Leon Cooperman, a billionaire investor, believes the market bottom has not yet been reached. He suggests that investors should sell into strength and buy into weakness, but with caution. He emphasizes the importance of careful stock selection in this volatile environment. The market outlook remains uncertain. Analysts are divided on the direction of the market. This uncertainty is likely to persist until there is a resolution to the trade dispute. Investors are advised to stay informed and consult with financial advisors before making any investment decisions. Section 6. Global Markets. Shudder, Bitcoin tumbles. The market turmoil is not confined to the United States. Global markets are also feeling the heat. Asian Pacific markets, particularly Hong Kong, experienced sharp sell-offs. European markets followed suit, opening significantly lower. The interconnectedness of global markets means that shocks in one region quickly reverberate across the globe. The trade war fears emanating from the US are causing anxiety among investors worldwide. This is leading to a flight to safety and a sell-off in risk assets. Bitcoin, the world's largest cryptocurrency, has also been caught in the crossfire. The digital asset, often seen as a safe haven during times of uncertainty, has tumbled below $80,000. This suggests that even alternative assets are not immune to the current market turmoil. The global market reaction highlights the far-reaching consequences of the trade war. It is a stark reminder that economic and financial events do not occur in isolation. They are interconnected and can have ripple effects across the globe. Section 7. Stay informed as the situation unfolds. The stock market is facing a confluence of challenges. Trade war fears, recession concerns, and heightened volatility are creating a perfect storm for investors. Navigating this turbulent environment requires careful planning and a steady hand. Staying informed is crucial in times like these. Market conditions can change rapidly, and it is essential to stay abreast of the latest developments. Keep a close eye on news headlines, economic data releases, and expert analysis. Remember, knowledge is power. By staying informed, you can make more informed decisions about your investments. Don't hesitate to reach out to financial advisors for guidance and support. And don't forget to subscribe to our channel for more market updates and analysis. We'll be here to guide you through these uncertain times.